All right, we'll give it like, I'll give it like 2 more minutes. um, any questions that you guys have throughout this? Just type them in the premium chat, and I'll answer them as we're going. You guys can see my screen, right? This one right here. Should be able to. Cool. The class will be recorded. All right. Just thought about putting these videos. Yeah. I'm gonna do that too. I'll probably go through tonight and do that. Maybe I'll make like a video for every single one of those channels. All right, cool. So let's begin. We're going to be going over the supply and demand strategy today, which is going to allow you to trade with the institutions. So we have to first understand what supply and demand is, right? Supply and demand is in the imbalance of supply and demand is the force that drives the price in any market. So it doesn't just have to be the stock market; it's any market at all. Imbalance of supply and demand is what drives it. All right. Like look at the car market right now, right? There's a lot of demand, but not a lot of supply. So what's happening? The prices are going up, right? And then once we have that equilibrium with supply and demand again, then prices start to come back down. So you have to understand that. All right, but in our market, these imbalances, as we call them, can be seen and they can be plotted on a chart, right? And that's how we identify these super low risk, high reward setups. And these are going to allow you to trade with the institutions. All right. So for supply is used to describe sellers, right? They're unfilled sell orders that are sitting at a certain area or a certain price range, and then whenever we enter that said range, all these sell orders, they trigger and price goes away from this area. That makes it supply. The exact opposite is demand, right? Demand is where there's buyers sitting at an area, unfilled buy orders. We come down towards that area, those buy orders fill, and you make a move up away from that area. So right, so that's what makes it demand. So we're going to be going over the laws of supply and demand, terminology, how it works, and how you can find and utilize these zones. All right, so the 4 basic laws are as follows. So if demand increases and supply remains unchanged, a shortage occurs, which causes the price to move higher. A good example of this is the one I just used, car market, or pretty much any market right now. Increased demand and supply is either unchanged or short, right? If demand decreases and supply remains unchanged, then a surplus occurs, and this causes price to move higher. So that's 2, and inverse. The complete inverse of those is going to be if demand remains unchanged and supply increases, then a surplus occurs. All right, that causes the price to move lower. And if demand is unchanged and supply decreases, then a shortage occurs, which causes the price to move higher, right? So there always has to be some sort of imbalance in between supply and demand for prices to actually be affected and prices to move, right? Now, here's a quote from Warren Buffett. You can read it if you want to. I'm not going to read it. It's kind of corny. Now, why should you trade like an institution? So there's 236 days last year that Goldman Sachs was profitable, right? There was 15 days of losses and 236 days that were green. 41 days out of those 236 were over $100 million days. And then the 112 days were between 50 to 800 million, right? And this is all maintaining 15 losses throughout the entire year, right? So this should be more than enough of a reason to trade like them or with them, right? It's the same reason you sign up for somebody's Discord. You see them doing good, you see them putting out big gains, whatever, so you sign up, right? Now, this is like the perfect example. Somebody's doing $100 million days, 41 days out of the year. Are you not going to want to do what they're doing? Yes, you are. All right. So little terminology before we get deeper into it. Supply is just sellers or sell orders, right? A imbalanced market is where supply is greater than demand or demand is greater than supply. This is what actually causes price to move, right? Your demand is just buyers or buy orders, and a balanced market is where supply and demand are in equilibrium, right? This is going to be just your consolidation phases or choppiness. There's nothing going on, no upside, no downside. You're just trading in a range. That means that supply and demand are in equilibrium. So how it works. So let's say an institution wants to purchase 2 million shares of Amazon, right? Amazon averages $3 million or 3 million shares traded per day. So this is a fairly large order, right? It's going to move the stock significantly. If there's only 3 million shares traded in a day and an institution wants to purchase 2 million, that's massive. So to avoid these super large movements from their orders, they buy into their large positions using smaller orders. And what happens is once a few of their orders are filled, they want more of them to get filled, right, at the same price. They want to remain at the same average in the same area. So what they'll do is they'll move the price up and it'll attract more sellers. These are your market participants. And they bring the price back down to where those unfilled orders are at, right? Now this becomes demand. Why? Because those unfilled orders that were sitting there are going to get filled and makes another move up, right? And then that attracts more sellers, it comes back down, and then it makes another move up because more orders get filled, right? And so on and so forth. So to identify supply, we find a candle that is followed by a large move away from that area. Right, once you identify your candle for supply, our zone goes from the bottom of the body to the top of the wick, just like this picture right here, bottom of the body to the top of the wick. And this is any time frame. So we see a large move right here, and the smaller candle that is right before the large move occurs. And so you take it from the bottom of the top of the wick. That is for your supply zone, right? And this is an example for supply. So you take the zone from the bottom of the body to the top of the wick, all right? Extend the zone out. You can see that we were provided with this short opportunity here and this short opportunity. If you go down a little lower, you'll have this one too. So there's a bunch of shorting opportunities you get in this zone by identifying that right there, right? This is from the drop base drop, which is similar to a rally base rally. So you see a drop, the base, and then the drop again. Your base more than likely is going to be where your zone is in the base. All right. Now demand is pretty much the exact opposite. You're going to find a move or find a candle that's followed by a large move. And to identify your demand, you go from the top of the body up here, top of the body, to the bottom of the wick. All right. And then whenever you enter that area, that's your entry. And this is an example of demand. Took it from the top of the body to the bottom of the wick, extend your zone out, and you can see how many opportunities were offered here. All right. And this is actually taken from an hourly. The previous zone I showed you guys was taken from a 15-minute. So I'm going to get into that a little later, but keep in mind the previous zone, how many times it was tested here before the next day was broken. And look at this one, how many times it gets tested before it finally gets broken, right? We'll go into that in a little bit. So time frames to draw your zones on. For scalping, which is what we primarily do, either scalping or day trading, you're going to take them from a 10-minute or a 15. If you want to do day trading, which is kind of going to be like scalping, except you're holding these moves for longer. It's going to be 30-minute or 1 hour. You can still use your 15 and 10. Your long-term, or let's do swing trading first. Swing trading is going to be your daily and weekly. That's where you're going to take your zones from. And then long-term is going to be weekly and monthly. All right. Something to note, this is what I was telling you guys about earlier. Every single time a zone is tested, it gets weaker and weaker. So your optimal zones are going to be your fresh zones. Every single time that a zone is tested, more orders get filled, right? Every single time you come back down to that area, you get another order that's filled, and then another order that's filled, to the point where now you have a very minimal amount of orders that are sitting there. So this means that it's not going to be as significant of a move up, right? As a matter of fact, after like the 4th or 5th time that it's been tested, you're probably just going to break right through it, right? There's not going to be, you're no more orders sitting there. All right. So there's that. Now we'll go into like actually drawing a zone. We'll draw some live here. So, oh, hold on. You guys still can't see the screen. Change window. There you go. All right, so now we'll draw some zones live right here. So I'm going to do this zone here. This is supply, right? So we identify move up, right? This candle is the candle right before you get a large move down. So this becomes a supply. So I'll do this thing right here. All right, we took it from the bottom of the body to the top of the wick. All right, extend it out, and you can see the opportunities that are offered here. The short right here, all right, short right here, and then you finally, after the 3rd time that it gets tested, this is actually the 3rd time, the 4th time we actually break through, right? And then now we're testing it for support. All right, so it's just like a support and resistance. It's just an SNR flip, all right? So you test it for resistance 3 times. 4th time it gets broken. You come down, test it for support, and you hold support, right? Now you get a super large move up. All right. And then I want you guys to notice, while that's happening, we make a demand zone right here. Right? This is the candle right before a large move. So you take it from the top of the wick to the bottom of the body, extend it out, and then, you know, that's it. Now you have this zone. So every time you enter this zone, this is going to be an opportunity for you to long, right? And the way you will play these, it's really simple. So you'll play this with a stop loss directly below your zone, right? So let's do that. If you want to be a little more conservative, you could keep your stop loss a little lower, right? So we have, let's say we have this swing low right here. You could go off of that, right? So keep your stop loss a little loose, but you'll have that there. Or if a 5-minute candle, 15-minute candle closes below this zone here, then you're stopped out. And you can enter anytime throughout this zone, and you can scale out at, you know, your previous highs or whatever targets that you may have. All right, so that's a demand. Just showed you guys a supply right there. This is going to be another demand zone right here. So we have a large move. Identify the candle right before the large move, this red one right here. So we take it from the top of the body, bottom of the wick, extend it out. Look at that. All right, so The reason this is helpful is because now look, we've established a bit of an uptrend here, right? And now we're making lower lows. We're in a downtrend now, right? So this is where people are selling their call positions. This is where people are trying to buy puts, right? And you're coming down to almost these swing lows, and people are like, oh my God, I got to buy puts right here. They're chasing puts. They're going crazy. While you, somebody who knows that there's orders sitting here, there's institutional buying going on, there's orders sitting right here. Now you're buying calls at a discounted price because you know what's going on, right? Do you wait for candle close to stop out? Yes, I do wait for candle close to stop out. But now you have this zone here. You know what's going on. You know there's institutional orders sitting here. You want to trade with them. So, you know, you place your orders right there. You know, you place more orders right here. You know, however you want to do it. You can either manually do it or already have your orders placed, however you want to do it. And a stop loss, obviously, you can do directly below, right? That easy. That's it. So this is your demand. All right, and then we can go back a little further. Here's the supply, right? So this is the drop base drop I was telling you guys about, right? So drop base, drop base, drop base, all these bases, these are zones, all of them, every single one. So you can take this zone here, right? So drop base, this base right here, this is the last candle before the move down, right? So your last candle before the move down or up becomes your zone. So you mark that as a zone, extend it out, right? Boom, there you go. So come down here. This is where people are chasing calls, right? Because we're about to break these highs up here, right? So people are chasing calls, but obviously you have these zones already put together. So you're shorting up here, right? Come down, test number 2 right here, test again, test 3, 4, a lot of tests over here. So now, of course, now it's getting super weak, right? And then you finally make a large and final move down before this zone gets invalidated. How would you go about scaling into these zones? So I start scaling in as soon as we get a touch, right? Your first touch of the zone. So for example, this one here, boom. So this is going to be my entry right here. All right, we got a touch right there. That's my entry. All right, you have to let the candlesticks also tell you a story, right? So notice all these wicks up top, right at your zone. What's this telling you? Every single candlestick tells you something. What is a higher top shadow and body towards the bottom of the candle? What does that tell you guys? What type of candle is that? Is that bullish or bearish? Somebody answer in the chat. Selling pressure, yes. So this candle moved all the way up and sellers brought it right back down. And this is right in your zone. So you have to read this, right? Because don't just blindly enter just because you found a zone, right? But you have to these zones don't turn into the opposite, right? Like how support can turn into these zones. No, they do. They do. I was just showing you that earlier. They do flip, right? So oftentimes your supply will turn into demand. But I'll go into that in a little bit. Let me talk to you guys about this first. So this would be my initial scale, right? And after I see that these candles are making this type of pattern, right? We're kind of basing, or we have higher shadows, super high top wicks. These are all just hammers. Hammer, hammer, hammer. Every single one of these. Or not hammer, sorry. Inverted hammer or fucking whatever you want to call it. Second entry would be like around this area, right? And I scale into 1/3. Shooter, yeah, there you go. I scale into 1/3. So let's say I got 2 entries right here. My average is sitting up here. As soon as we reject this zone, like this candle here, this is a good candle to average in on. And then I would add my final one right there, right? For all my strat people, this is why I combine different strategies. What is this? What is this setup here? This candle, this candle, this candle. What setup is that? Somebody tell me. Anybody enter in the chat?
That two down, two up, two down.
Yep, exactly. So right at your supply zone, what's going on? You're forming a bearish reversal, right? So this is like your ultimate confirmation. You're sitting at supply and you're forming a bearish reversal. Your bearish reversal completes, right? That's probably where I would start adding even more, right? Now you have a full 1/3 position. You can do whatever you want from there, target your lows, you scale out whenever, you know, do whatever you want, right? This entire time, no telltale here to exit, right? You're forming a bear pennant here, you know, everything's there, everything's in place. All right, similar story right here. Same thing goes for this area, right? Your first entry on the touch. That's your 1/3 entry, right? Now the reason I'm only going to enter 1/3 here is because this has room to go all the way up top, right? And then, like anything else, this is not perfect. It's not a perfect strategy, so it can just break right through. But what's going to happen is, since you're not in a full position, you're only in 1/3 here. If it goes all the way up, you can exit, and you're only losing a certain percent of 1/3 of your position, not your full position, right? So you're saving a lot of money there if it doesn't go your way. But all right, so same thing goes for here. You're looking for any type of bearish telltale sign, right? My first signal here would be this big push, massive push up into supply and zero continuation, right? You have a good amount of volume on this candle here too, right? You go from 52K, the volume's in the top left here. You go from 52K to 73, so there's good bullish volume here, but no follow through. Why? Right? There's massive orders sitting up here. That's why. Right? And then you get a 60K red candle down, right? And boom, we go into a lower volume retest. Right? So what is this? This is simply, it's literally just a retest of your support, right? You get or resistance, sorry, you get a rejection, right? Retest, and this is the drop. So on this low volume retest right here, I'd probably start adding more, right? Or once you see this big rejection here, you can add more right here, right? And then once you finally go green, or you see like a reversal setup, whatever you see that makes you want to add more, then you can add more right down there. Right now you're in a full 3/3 position targeting these lows down here, right? These are equal lows, and you go and hit them. All right. Same thing up here. Your final test here of this zone, we're looking at the same thing. You're looking for any bearish telltale sign, candles, reversal, whatever you want to, whatever you like to go for. That's what you're looking for over here, right? And so this candle does go over your supply, but look, no close. You wick right down. So that's number one. Right, number one telltale sign here is that you're going up with good increasing volume, and then your highest volume candle here is a red candle, 80,000, right, all the way back down. And then what is this? A 2-2 reversal down once again, right? So bearish reversal right at supply. These are all things that you can use for added confluence, right? This is going to give you more confidence in the trade that you're taking. All right, so there's that. Oh, one more question. Could you give a bit more detail on what you mean by candle followed by a large move? I see a lot of significant moves. Would that mean hella zones, or are there some more parameters you use before defining it as a zone? So I would, me personally, I like to look to the left, because oftentimes if you see like I don't know, let's say this candle here, right? This is a candle that's followed by a large move up, right? This is a zone, but look, this zone here that I'm about to show you guys right now it already has that in there. So this kind of overlaps this one. You don't want to have too much shit going on here, right? I mean, this is going to serve you no purpose. Look how big this zone is now. This is going to do you no good. You want to go with the higher probability zone, right? This is your discount zone down here. So this is higher probability than this. Your risk to reward here is a lot. Your reward's a lot higher with lower risk compared to here. This over here, your risk is all the way down here. This is swing low, right? Your reward is not as nice either here either, and this zone is bigger. So it's up to you if you want to use this one or this one. I like going with the higher probability one. Also, this one came first. This one just overlaps it. So. And you can find these zones on the 15 or 5 for like that are temporary, like they can happen and end in a span of 15 minutes, couple hours. I would keep it at 10 minutes, the lowest time frame you go. Don't go lower than 10. You can find zones on a 5, but they're super low probability because it's from such a smaller time frame. It's like support and resistance, right? A support or resistance or key level that you get from a 5 minute, is it going to be as strong as a level that you get from a 30 or an hour? No, right? So the same concept goes into your zones. You don't want to get these lower probability zones. They're not, I mean, they're there and they might work, but the more prominent ones are the ones you're going to get from these higher time frames. Plus, a 10 or a 15 is going to provide you with a lot of zones intraday anyway, so you shouldn't have to ever drop to a 5. Yeah, I mean, like they can pop up on the day and then on the same day. Yeah, 100%. 100%. All right, so let me do this one first. This is a supply, right? So we're going to take it on this candle. We're going to take it from the bottom of the body to the top of the wick. This is a little weird because the way this candle is shaped, it's literally going to be the entire candle as our zone, right? But boom, you have this here. So again, when we come up into the zone, what are we looking for? We're looking for any telltale bearish sign, right? And what do we have here once again is a 2-2 bearish reversal, right? So there's that. You have this shooter candle here, right? And then there's this, I forget what this candle pattern is called. It's not a hammer. It's like when it's a red hammer. I don't know. Somebody's got to know. But this is bearish too. And then you get this big knife down. But again, same concept goes into it, right? So this is one where you can enter in right there, right? First touch, first entry, initial entry, 1/3, right? It keeps going up a little more, average in. Stop is directly above or a close above. I'd rather stick to a 5-minute close above or a 15-minute close above because to me that makes more sense, right? Because anything can happen. A candle can just wick down like this. All bearish volume too in that area. Yeah, look at this. It's all bearish volume. But yeah, regardless, but you're looking for any type of telltale bearish sign, right? And then you get your second entry up here, your reversal happens, right? You can add more, wherever at that point. Add when the fuck ever. Because once you reject a supply zone like this, you're going to make a move down. All right. So there's that. And then you have demand right down here on this candle. Right, candle followed by a large move. And another parameter that I like to use is I don't keep my zones too big. Like I wouldn't go this candle here, right? I wouldn't do that. It works, but I wouldn't do that because look how big it is. This is so like, I don't know, just no good. I don't like it. I would rather stick with the smaller zone. Right, this is going to provide better entries for you. You have this one, which obviously this one was pretty strong. You make a really nice move down and then a massive move right back up. Right, so there's a lot going on here. Come down into the area. This is your first entry right here, right? These are all intraday opportunities again, right? And then you double bottom in the zone, right? So this can be your second entry if you didn't fully enter here. And then look at this. You literally get another bottom right here. And this is crazy. So this is on ES, right? This is why I like using zones on ES and NQ as well. So this is the overnight session, right? This candle or this zone was made the previous day, May 13th, right? This is your full overnight session. You see in the I tell you guys all the time, the overnight session tells you a lot. So overnight session is showing you that this zone here is actually, it's pretty prominent. It's a big zone, the way you're rejecting off of it. And the next day we open up, right? You open this candle here and we go down literally right into your zone. These are the high probability setups that I always tell you guys about. Look at this. Check this out. I would full port this. I don't like full porting shit, but I would full port this. Check me out right here. Stop directly below, right? Target your previous highs. This is a 1 to almost 10 risk to reward right here. All right. And right off open, if you catch 0 DTEs right here, down here, targeting these highs, and you hit that target, right? If you catch 0 DTEs here, this is easily 50 to 80% right here. Done, right? Except the more times the zone gets tested, the weaker it gets. So by the fourth time it tests, it seems scary to full port that. Yeah, for sure. I'm not saying full port it. I was kind of just messing around. But the point is that this is a higher probability setup because of the way that you would position yourself here, right? Is because your stop is so close. Like if you enter in here, your stop is right there with a reward of, like, let's say your previous high right there, right? Like this seems like a setup that I could size into heavily because the loss I would take here is almost nothing, right? So even on 0 DTEs, I can tell you right now, if I enter in here and stop out right there, that's going to be -10, -15% max, right? So you're risking -10%, -15% to make, what is this up here? Like what, let's say 50, 60%, right? That's the reason why I'm saying higher probability, something I would full port. Definitely not saying full port it though. You mentioned earlier, the more touches, the more likely to reverse. Could you go over an example of how to tell that it'll be likely to break the zone? I mean, if I can find one. Okay. Let's see if we can do something with this zone here. What can I mean, there's not really much I can see here besides the volume. So we get up into this zone, check this volume out. This is overnight session, so this is going to be lower volume, but still take note of the volume here, right? So you go from 3K to 7K, right? Now you're in the zone. If you're in the zone, this is an example we just saw earlier when you saw a high volume candle go straight into the zone, and then another red high volume candle just comes straight out of it. This one is a lower volume red candle, right? You go from 7K green into your zone, closes there, and this one closes in your zone with lower volume. All right, now this is probably a pretty good chance that we're going to break the high of the zone, right? Because when the next candle opens, now you have 9K. So this is even more volume coming in now. So buyers are super aggressive here at this point. That's the number one thing that I would refer to is volume. After a while of using zones, you'll have seen like every different type of candle that there is in your zone. You'll learn over your course of using supply and demand, which strategy works better for you, whether it's to identify a reversal, whether it's to look at volume. For me, I kind of utilize everything. So as far as those strat reversals I was talking to you guys about earlier, this right here, these two candles, these two set us up for a 2-2 down, right? But instead we triggered the upside here, right? We triggered that upside. So that's showing me more buyers than sellers. If not this candle here alone, right? This candle is going to show me there's more buyers than sellers as soon as you break this high. And I could have already told that by volume. So it's up to you which one you guys want to use. I don't want to overcomplicate things for you guys. So you pick. I'm just going to tell you what works for me, and I use volume. And this is your flip right here, right? You go from supply, up, down, demand, right? And this is so perfect. You don't even need to change the zone because your demand would literally be top of that, top of the wick to the bottom of the body, right? It's literally almost the same thing. And then you have that. All right. So, and then you can see we get tested right here again, move up. Same thing happens here where you get a high volume drop down into your demand, right? Now, how are you going to know that this reverses or it doesn't reverse? Volume. Or you can look for a reversal. If you want to look for a reversal, we trigger this green candle pops up, right? Oh. So this is, I believe this is an inside bar, low 4035. Yeah, this is an inside bar. So inside bar right here. So inside bars are pretty easy to play. You're going to play the break of this high, targeting your previous high. So what happens here? You break the high and it never finishes. Instead, it breaks the low. All right, so that's showing you more sellers than buyers here. And so you can play it based off that. And obviously you get a really nice drop down. And again, remember all these little bases right here. These are all short-term zones, all of them, every single one. You can see this was one of the ones we just went over, right? Look at that, check that out. All right, and if you break over that, then guess what? Then you target this zone. All right, actually, not that one. I would target this zone. Why? Because this zone here is your higher probability zone. This is what we just went over. This zone includes this one, right? This was just a retest of this zone. So I would rather go with this than this. All right. So you have that. So now you can safely say, okay, once we break over this, we're targeting that. And check this out. All right. You get a couple breaks over that, right? Up here, you get a break over right here, and then you go and you reject from that exact same zone that we had earlier. All right. So any questions about this so far? It's really simple. I don't like to teach you guys anything that's gonna blow your minds. Most of this stuff is, even if you're a complete beginner, you should be able to wrap your head around this. If anybody wants to talk and has a question they want to talk, just type in the chat, tell me to unmute you, and I'll unmute you. So all you guys are supply and demand experts now, right? All right, does somebody want to somebody volunteer real quick? Like somebody say me if you want to like draw a zone real quick. Nobody wants to fucking volunteer? All right, cool. Jay Singh, can you? I'm gonna stop sharing my screen. You share your screen, and open up your Trading View or whatever charting platform you use, and let's go over it right now.
Bro, can you see it or no?
Can't you see? Yeah, it's loading. Interesting setup on your class schedule. You're going over zones before key levels. I feel like most of you guys that are in here know the absolute basics. Key levels is like the down and dirty. Like that's the first thing you should ever learn when it comes to technical analysis. Is there anybody in here that's not familiar with key levels or doesn't know? The only reason I did zones before key levels is because one, it was highly anticipated, and two, I had this fucking slideshow that I spent hours on, so I was kind of excited. But yeah, that was it. I'll make a more fire one for the zone for the key levels, but we'll get that done too. I can't see your screen, bro. You're
I
having
know, bro. I don't
some
know. It's
network
saying.
issues.
Let me see. 1 second. Let me reset it.
Here, worst comes to worst, we'll do it on mine, and you just tell me which one.
Gotcha.
Are key levels same as support and resistance? Yeah, dude, same exact thing. Literally same thing. Key levels equals support and resistance. You made one for the strat? I didn't make one. Somebody else did. I'm just gonna use theirs. Uh-huh.
Yeah, bro. I don't think it's gonna work.
All right, I'm gonna share mine again, and you tell me. We're gonna go fucking back in time. Some shit we haven't used yet. All right, boom. Tell me. Hold on, let me see if I can find one first. Okay, boom. Tell me, there's a supply over here somewhere. Or if you find a demand that I haven't seen. Tell me where you see it.
Let's see. What about that big move down? Right at 12.
12.
Now you're looking right there.
Yep.
Yeah,
Okay. So where's the zone here?
So basically, top of the black candle, top of the wick, and then the bottom of the body.
All right, boom. There we go. So we have one supply and demand expert in here already. So top of the wick, bottom of the body, that's your supply, right? Reason being, obviously, candle before the large move occurs, right? And identify that candle, draw your zone, extend it out, look at the short opportunity that's provided here. All right. And these candles are a bit weird because this is after hours or overnight session, so super low volume, but still. Okay, so that was a good one. Anybody else volunteer for another one? What would be considered a large enough move? I wouldn't say that there's like a certain parameter of a large enough move, quote unquote. Just a relatively large move compared to the price action you're seeing. All right. So like, look at these candles, right? Super small, tiny candles, right? And then you go right into this green candle here, right? Would you guys agree that this is fairly large compared to the nearby candles? Somebody say yes so I can continue. All right, cool. So, all right, so you identify this candle right before your large move, even though it's not that large, it's relatively large though. And then here, now your zone is born, All right, boom. Short-term zone right there, right? Come back down, retest it, and back up. All right, it's that easy. You compare the move or the candle to the nearby candles that are, you know, in your immediate area. That's what I would go off of personally. 24th. Okay, 24th. Boom. 8 a.m. We're at 8 a.m. On 15-minute. Yes. This candle here? Or if you guys want, go on your own charts and send a screenshot. Take a screenshot, take a picture, and put it in the premium chat. Okay, boom, we got one right there. Look at that, perfect. And so this is where multi-time frame analysis comes in, right? When I tell you guys about swing trading and long-term trading and stuff, these zones you're gonna get from a daily time frame or a weekly time frame, they're a lot more significant than zones you're gonna get off of a 15-minute or a 30-minute. Look at this right here. Check this out. All right, you got this zone here, and then you come down, you retest this zone, and look at the massive move that unfolds, right? Your bigger time frame or larger time frame zones are going to be way higher probability. They're way larger. They're just going to hold. Like it's a larger time frame, right? So it's the same thing, same concepts that you would use for key levels or support and resistance. Your larger time frame support and resistances, just like your larger time frame zones, are going to be more prominent than zones you're going to find on a 5-minute or 15-minute. All right. So check this out. So let's say you wanted to swing trade ES, right? This is a daily chart for ES. So let's say you wanted to swing trade SPY or trade futures or whatever, right? We identify this zone up here. This is your supply, right? Boom, pull that out. All right, you come down here. This is your demand, right? Now you have two of these. All right, if you come back here, look, without trading anything, we've identified two zones. So you come up, right? Short right here. You're coming up into supply. Short right there. Stop loss directly above, right? Short right there. Come all the way down, right? This is your long, right? So you can come down here, sell short, go long, targeting your zone up there, and then boom, right? You go and you hit your zone. Right? So this is like the perfect example of a swing trade. Yeah, those lines are valid for your broadening formation, and that zone's fire. For supply, it's top. For supply, it's top of the wick, bottom of the body. For demand, it's bottom of the wick, top of the body. So for your supply zones, it goes bottom of the body to the top of the wick. All right, and for your demand zones, it's the exact opposite. For demand, it is top of the body to the bottom of the wick. This information is in the supply and demand channel. Like all this stuff that I'm telling you, teaching you guys right now, is all taken directly from this channel. So everything is in there. There will be a video posted on this, but you guys will have that too. All right, so any questions about that? Supply goes bottom of the wick, supply goes bottom of the body, top of the wick, and demand goes top of the body, bottom of the wick. Any further questions?
How would you chart like what's currently happening? Because like through supply and demand using like, would you just use the overnight session on the ES?
Yeah, pretty much. Currently, oh wait, oh shit, I forget. Fucking futures are open, guys. Wow. We're up. Cool. Yeah. So to chart like what's currently happening. As far as like from a supply and demand perspective, you have supply up here, which not a super high probability supply zone now that it's been tested 2 times here, but you know, it's still there. So you have this supply up here, and then you have demand down here. All right, boom. There's your demand. So we're kind of just trading in between these ranges here. What feature are you using for the supply and demand yellow zones? I'm using the rectangle here, if that's what you're asking. I think it peaks 430. Yeah, that would put us right around this area here. This is about 430, 429-ish on SPY. Any other questions? You guys learned something from that? You guys like, is that a good class? Cool. So now that's another thing you guys have under your belt now is supply and demand. All right, so you can use this whichever way you please. I use supply and demand a lot. It's one of the main strategies I use along with my EMAs, obviously. But I use kind of a mix of everything. For some, that might be a little overwhelming. So, you know, I'm going to teach you guys everything that I know, and you guys from there, it's on you to decide which one you want to go with, you know, which one works for you. I understand why you use it too, trading with the big dogs. Yeah, dude. I mean, if you can trade with the institutions, and if you talk to the fucking Forex guys, or if you know anybody that does Forex, how do they trade? They trade like the banks. They want to trade with the banks, with the institutions, right? That's what makes a successful trader from just an average retail trader. Retail doesn't win, right? Let's get that first. Let's get that fucking out of the way. Retail does not win, right? So you don't want to be just like the average market participant. You want to be profitable. Who's the most profitable in this market? Institutions or retail traders? Right? Your institutions are the ones that are making the most money. They're the most profitable. So why wouldn't you want to trade with the institutions? You know what I mean? If you know you have institutional orders, if you knew that the size of these orders that were sitting down here or up here, you would 100% hop on it. Right? Those are good zones right there. Solid zones. I like those zones, Quinn. Good. So you guys retained something from that. That's good. I'm gonna stop the recording here.